We're going to turn now to the economy. As we mentioned earlier, it's been 1 year since the collapse of Lehman Brothers, which signaled the credit crisis quickly taking over the entire economy. So where are we 1 year later when it comes to finding a job, selling your home, making your money grow? Well, joining us now, GMA financial contributor Melody Hobson in Chicago. From San Diego, Liz Ann Saunders, Chief Investment Strategist for Charles Schwab, and with us here in the studio, Mike Santoli of Barron's Magazine. Good to have you all here with us this morning. I want to start with you first, Melody. A year ago, on a Monday morning, I think your quote was, "It's Armageddon." Remind us how scary it was.
It was really bad. I have to say, I'm usually optimistic, and we were at the epicenter of uncertainty on that day. It was hard to fathom the ripple effects, but the good news is we got through it.
We did get through it, and we're still continuing to get through it. Let's talk about the major sectors. Let's talk with you about jobs, where we stand now, Melody.
Well, certainly we've seen the job picture not be a pretty one. We've gone from 6.2% unemployment to 9.7% in the last year. But the good news is, even though 15 million people are out of work, things are moderating. And so if you look in March, just 6 months ago, we had over 663,000 people laid off. And yet just in this August, that number has moderated down to just over 200,000. So things are getting better, even though it doesn't seem great. And I know if you're out of work, this has been a very hard time. The good news also is that typically the job story is a lagging indicator. Unemployment lags a recession. And so just as we see a recovery, things should get better 6 to 9 months after the recession is over. Things will improve.
Will improve, but you're right. If you don't have a job, there is no recovery for you right now. But for other people, we are seeing some progress. Let's talk with Liz Ann Saunders. I want to talk to you about personal finances, because the stock market is down about 16% from a year ago. So if you have some money, what do you do with it, Liz Ann?
Well, you know, too often I hear people answer that question. And what I mean by that is, you know, it depends on who you are as an investor. If you were asking that question of, say, a 75-year-old who was in retirement, needed every dime of what they had, needed to live on income, versus, say, a 22-year-old that has a multi-million-dollar trust fund, just started working, doesn't need the money, the answer to what the investor should do now is so vastly different. And I think that's the thing that people miss. They think of the market as, when do I get back in or when do I get out? Those are not investment strategies. And I think it has to be a very personal decision. For a lot of investors that are looking to beat inflation, to grow their assets over time, they need to have some exposure to the equity market. But in terms of how much, when to do that, what the process is, that's a very personal decision depending on your own situation, your own personal set of circumstances, risk tolerance, time horizon,
right.
All of those very important specific things.
Yeah, that all factors in. So we've taken care of personal finances, we've taken care of jobs. Mike, I want to talk to you about the housing market, because existing home prices down 15%, new home prices down more than 11% compared to a year ago. But have things started to stabilize, Mike?
Early signs, yes. You have to keep in mind that the Lehman Brothers and the credit crisis episode there accelerated the decline of an already weak housing market. And what we're seeing is the lower end of the housing market, lower priced homes, are really being taken up thanks to the federal government's tax credit for first-time home buyers and some speculators in there. And we also do see an abatement of the pace of declines right now. So I do think it's one of these things. Housing is going to cease being a big drag on the economy. It's not going to lead us out. But so far, at least in the lower end, we're seeing some hopeful signs. I
want a final note from all three of you, beginning with you, Mike. Where are we going to be a year from now?
Slightly better. It's going to be a bumpy recovery, but I do think that it's going to be clear in a year's time that things are better.
Liz Ann?
Well, Robin, you know, I think the recession's over, and I would say the same thing as Mike. I think we're in recovery mode. It is not necessarily going to be smooth, but I think in the end, we're going to be pleasantly surprised.
And Melody?
I think we're going to move from stabilization to growth. I'm optimistic.
All right. Thanks to all three of you this morning.